Welcome, everyone. This is Dan Toll. I'm the president of CICA. We're going to get started here in just a minute. We're going to give people a few more seconds to get online here before we get started. For those of you on the line already, thank you for joining us. Okay, let's get started. Welcome to CICA's student essay contest sponsored by Highland Global Captive Solutions. We're thrilled that you're joining us here today. We know that many of you do download this and view it later, and that's fine as well. We want this webinar to both be informative about what captive insurance is, hopefully also to pique your interest about it, give you a little bit more information about the case studies, and finally also allow you to get to meet our mentors. So, as I mentioned, for those of you who might not have been in the very beginning, my name is Dan Toll. I'm the president of what we call CICA, which is the abbreviation for the Captive Insurance Companies Association. We will have some opportunity for questions at the end, but let's dig right into how do you participate? So what you do at first is you choose one of the three case studies. We want you to analyze and design what a captive insurance structure would be to address an organization's prime insurance risk and explain why you did that. We also want you to identify additional risk management strategies or changes an organization may make as a result of establishing a captive insurance company. That is, I actually think, one of the more exciting things about the contest is that when a company decides to set up their own captive insurance company, it really does change their whole philosophy on how they manage risk. So let's get to the fun part, the prizes. And again, I want to thank Highland. Highland is the one that's putting up the cash prizes, so thank you for that. First and foremost, we provide checks to you and your partner in this. These are not checks made out to the university. This is not made to your parents. These are to you. So this will definitely give you some spring break money if you become one of our top three finalists. We also give you a free registration to our annual conference, which is March 10th through 12th out in beautiful Scottsdale, Arizona at the Westin Kierland. You're also published in Captive Insurance Times, and we also publish the winners on our website. So there's some great, you want to get a jump start on some nice awards. This is an incredible opportunity to do that. So what are the deadlines in sort of the timeline for all this? First and foremost, today is sort of our official kickoff with the webinar for interested students. October 20th, we would love if you would give us an intent to submit. This doesn't mean you have to submit, but this really gives us a better way to communicate with you when you sign up and do that. Occasionally, there are changes in timeframes or different things, and we want to just start communicating with you once we know that we believe you're going to submit. It also helps us be better organized to know whether we're going to get in 10 essay contest submissions or 50 of them. So it's very, very helpful, and I encourage you to do that. You do not have to do the intent to submit, and you don't have to do it by that deadline, but it really, really does benefit you to do that and helps us out as well. November 17th is when you submit the submissions. After that, members of the CICA board do a scoring, and we'll have the top three finalists from that. I should note the full rules for all this are on the CICA World website. There can't be three from the same university in the top three finalists because we like to mix that up a little bit, but we'll let you know by January 10th who the finalists are. At that point in time, we'll introduce you to the mentor that'll get assigned to your finalist team. And we give you an opportunity to really do a fine-tuning of your submission and prepare to do the presentations at the CICA conference. At that point, that's when we score them again and decide internally who the first, second, and third place winners are. And I will tell you, it is top secret, and no one knows until you are on stage to receive the awards. So those are those dates, and that's again March 10th through 12th. And then again, we expect these all to be published in our international trade media partner, Captive Insurance Times, in April. What do you need to do? Teams of two. We've had this question come up before because we've had interns at an organization that actually are at different colleges or universities. That's fine, but you definitely need two individuals. While we do certainly encourage risk management and actuarial sciences and business majors, you don't have to be a major of any of those to submit. So certainly we want to encourage as many people to submit as possible. 10 pages or less, they can't be previously published. And again, these are judged by the CICA board members. Your resources for these essays, you can start contacting myself. You can contact the mentors right away. Any resources available to you. And we encourage you to talk to people in the industry because it's a great way to learn more about it. And finally, again, I want to thank Highland Global Captive Solutions, and I'm going to kick things over to Anne-Marie Toll, who's the CEO of Highland Global Risk and Captive Solutions, to introduce her team and provide the overview of captive insurance and get to the case studies and finally have to meet the mentors. Thank you.
Excellent. Thank you. And welcome everyone. And really looking forward to our sponsorship this year as Highland Global Captive Solutions of the CICA Student Essay Contest for 2024. Looking forward to seeing some of you in Scottsdale. We're very proud to sponsor this because of the opportunity to be able to interact and help provide you some options for career paths as you're looking beyond your current college experience. With that, we've got a great team here together that will help provide some guidance. Not only myself would be available, but Dawn DiNardo, who is the managing director of our captive management operations here at Highland, is based in Charleston, South Carolina, has been in the industry quite some time, well over 16 years, and has a wealth of experience. She, with myself, help guide our practice here at Highland. In addition, today on the phone, we have Monica Birchmore, who is a senior captive account manager based in Burlington, Vermont area, and has been in the industry over 7 years now and has a lot of guidance, not only for Vermont, but also other domiciles, a tremendous amount of wealth of insurance experience and captives and risk retention groups. And we're going to share some insights today regarding a few basics for you for captives. In addition, on our team, we have Claire Richardson. Claire is a captive consultant, has been in the industry over 3 years, a Butler University graduate and based in Indianapolis, Indiana, and does a fantastic job on the upfront, working with clients, educating them, and providing feasibility analyses and overall strategic reviews and assessments for our clients. And then last today, and one of our most recent hires from the industry is Caroline Erdman. And Caroline joined us in June of this year as a University of South Carolina graduate based in our Chicago, Illinois office, and is working with us on as a captive account manager, but also stretching across into the consulting focused area as well, and working with myself and Claire and Dawn and other team members on learning and understanding feasibility and implementation of captive structures, and then working closely with Monica and some of our other team members on the day-to-day management. So you've got a wealth of knowledge here, and then even tapping into a couple of people who are recent graduates and going through some of the same learning adventures that you all have done as well, and really looking forward to sharing our insights here today. So we're going to review a couple of captive basics real quick, walk through these with you and share some insights in order for you to be a little better prepared to know and understand what is a captive and why would this student essay contest be very valuable from a learning experience for you. The first area, before we even define what is a captive, we want to make sure you know and understand, and in some of your classes that you are participating in, you probably have some, if you're a risk management major, focused on overall risk and in the insurance industry. So thinking about what is risk transfer versus risk retention. and really looking at and boiling it down to, for many organizations, they either have people, they have different areas of exposure. So when you look at assets, if you're a property management company, you have assets that you own. If you're a health care organization, you probably have those assets that you own, property, you have people, and then you have end users, or what we call customers or clients. And looking at those different exposures, and as we've identified here, you have the opportunity to either transfer the risk and the exposure associated with it, or you can actually retain it. Or quite honestly, what happens in today's world, it's a hybrid, because people don't just transfer every single dollar. A lot of times they're looking at, what can we do to help drive down what we call our total cost of risk with these exposures? And it's working through that process that becomes very important. And some of this you're going to see if you decide to submit for the student essay contest, as our three, as Monica, Caroline, and Claire present the different case studies here at the end today, you'll see how this will relate to it, related to the aspect of identifying exposures. And if you look at a retention vehicle, which is a captive, it becomes extremely important from the aspect of, how have you identified those and what does it mean for your organization? And I do want to point out that this can be applicable for profit companies and for non-for-profit companies. So they're not just used for the large organizations in the world. They actually are very applicable to many different types of organizations. Thinking about that aspect and defining what is a captive, because many of you might not be familiar and have heard of a captive. To break it down simply, it's a licensed, regulated form of self-insurance. What that means, it can be as simple as, you take a deductible on a policy today. All of you probably have heard your parents talk about buying car insurance. When you learn to drive and you have to have car insurance here in the United States. And they probably evaluated looking at taking what we call a deductible. If you are in a car accident, you pay perhaps a $500 deductible versus a fully insured product. Well, with that deductible, you have the ability to finance it or pay money aside and set it into a captive. And that can become very valuable. And we'll talk about a few of those benefits here today. But essentially, you have the ability to retain that risk, write it in a captive. And back to that prior slide, there were a bunch of different opportunities on the different exposures you have. So whether it's an automobile, environmental, or various types of risk, you can finance that within the captive vehicle itself. And we'll walk through those benefits here today and share with you the different types of captives to help better prepare you for the essay contest and give you some background materials.
So when we think of kind of why captives are formed, why an organization would look towards a captive, these are mainly our 6 C's. So these areas are really proven and true in, creating a captive to be that strategic enabler for an organization, one that allows the organization to grow and to continue to have control. So control is one I'll start with first. The control that a captive brings to an organization can be influential in its operations, and it allows them to create a true program design and policies and procedures in assisting the management of claims. So if you're your own insurance company, you have almost entirely control of your program and what kind of claims are able to be paid versus ones that don't necessarily make sense for an organization to pay. Additionally, kind of working our way down and around capacity. So captives have the ability to go directly to the reinsurance market. And this, oftentimes we see clients, this is a very positive area for them. So what that means is there's a middleman cut out. So maybe you don't necessarily need the assistance of a reinsurance broker, where you can go straight to the the reinsurance market and get some serious capacity for the risks that are insured through the captive. And then coming down to cost, I briefly mentioned it in the capacity portion, but with the cost, you have the ability to leverage the insurance market like you maybe have not before in terms of a company's risk profile and their risk appetite. Like Anne-Marie was mentioning, you have the ability to push the traditional insurance market, what we like to call higher in the tower, meaning you can take a larger deductible as an organization and really take your own risk into your own hands and your own insurance company and fund for it correctly. In terms of coverage, this is personally my favorite one because a lot of organizations have a lot of difficulty finding coverage for their very specific risks. So with the captive, you have the ability to fill coverage gaps. These are things like specific products or nuanced services that really don't have a place for them in the commercial marketplace. And so organizations are able to fund correctly for their risks and write insurance policies that thus insure their risk correctly. Additionally, for compliance, legal and tax certainty is a huge portion of captive strategic enabling an organization, as well as premium allocation. So this allows your organization to still be in compliance with a variety of contracts, as well as creating certainty through all of the other C's in conjunction with compliance. And the last one is commercial. So some organizations choose to have their captive function similar to a revenue generation vehicle. So what I mean by that is, for example, these extended warranties under here. There's an opportunity for a captive to play in that space and also provide some capacity in terms of premium collections as well as reinsurance, like I had mentioned before, capacity. Anne-Marie, anything to add here before we continue?
No, I think the big piece that I would say, and that's important highlighted, is not only taking control of these different areas, but really looking at and evaluating, being as creative as possible. And that's really the innovation that happens within our industry. And it's an important aspect when you're looking at the captive as a strategic enabler.
Great, thank you, Anne-Marie and Claire. And then when we're talking about captives, there's 4 main types of captives that can be chosen. So the first 2 that I'm going to go over are risk retention groups and groups or associations. Risk retention groups are kind of their own animal. They are regulated under U.S. federal law. In order to be part of a risk retention group, all members have to be insureds and all insureds have to be members. And there is limitations on the certain lines of coverage that can be written through a risk retention group. But it does allow, there is ease of use to write coverage in all 50 states, which is one of the major pros of a risk retention group. The next type of captive is a group captive, which is where multiple companies own the captive together, and there is risk shifting and sharing involved in that captive. The next is a cell captive, which is, it provides lower startup and frictional costs compared to, say, a single parent captive or a group captive. Within that cell captive, each cell is segregated. Its assets and liabilities are owned by that parent company. The last type of captive is a single parent captive, which it's owned by one company and it insures or reinsures the risks of its parent, its subsidiaries, or chosen unaffiliated parties. Anne-Marie, do you have anything to add on the types of captives?
I think you covered them very well, Monica. Great overview.
Great, thank you.
And so, we've learned a bunch about some various types of captives. We've learned a lot of different benefits to captives. So who should consider a captive? So what are some attributes of successful organizations that have a captive? When you are an organization looking towards a captive or any risk retention vehicle, you need to be financially stable. You need to be really willing to be proactive and invest in yourselves. The organizations that do create captives have that really, really good set risk management practices. They already have those policies and procedures in place. They know their risk, they know their claims history, and they know that they can be successful in investing in themselves. Oftentimes, they'll have a low loss ratio or a manageable loss ratio, one where they understand their claims history and they know that it is something where going through a feasibility analysis, which is what we'll talk about further into this presentation, would make sense for them. Maybe looking at a captive to really smooth out their cost of premiums over the couple of years that they have the captive in a long-term investment. And then just like Monica was mentioning with a group captive or a risk retention group, many times individuals that look towards creating a captive have to be willing to work with other companies. So a lot of times you're going to have maybe competitors in a group captive or a risk retention group, but you have to understand that you're in the same industry, and that's going to be something that is inherent to the structure itself. So when we think of who would be good to consider a captive, these are just some of the areas that I think might be good to highlight throughout the presentations and the essays as well, because the organizations that we'll explain later have unique quirks and unique risks that could be really helpful when applied to this slide in particular.
And then talking about why a captive should be considered in the general business sense, there are three main categories that we're going to hit on, and those are financial, control of your risks, and also flexibility. So from a financial standpoint, as Anne-Marie was mentioning, those risk management and insurance dollars can either go out to the commercial market, or we can retain that risk, and those premium dollars can be set aside in the captive. And if the captive experiences manageable losses and losses that are expected based on the feasibility process, there's profitability that can be captured within the captive. Also speaking, there is investment returns that can be captured. So rather, as I mentioned, rather than those premium dollars just going out the door to a carrier and being gone, it's set aside in your own captive insurance company. The second kind of category of why you should consider a captive is for control. So a lot of times when you are, I think, in my opinion, captives kind of make it so you have a little bit more skin in the game. So you're taking a closer look at your loss prevention and your claims management, and you're paying more attention to those processes that are in place in order to lower your losses, in order to capture that profitability. And the last being flexibility, and Claire touched on this a little bit when she was talking about the 6 C's. For some lines of coverage, it's either it doesn't exist in the commercial market, or it can be difficult and expensive to get. So a captive provides flexibility in that sense when we're talking about new lines of coverage that are up and coming, and also lines of coverage where it's a little bit more difficult to get in the commercial markets.
Great benefits, of course, to a captive, but anytime you speak to and talking about a new venture where you're setting up and establishing a new box on your organizational chart, you always want to have and think about the considerations. And part of it is comparing and looking at how your program exists today. And what we always say for organizations that are going down the path of a captive is really looking at an organization that is cash rich per se, meaning that you have cash that can be funded into the captive to pay the premium and to pay claims as they come due, but also that capitalization. There's some money that's initially infused into a captive vehicle, and it must remain in there for the life of the captive. And so competing uses for that captive sometimes is, how do you help explain to your organization that the funds need to be remaining in the captive vehicle? And there are some benefits with putting cash into the captive, because you do have the ability to distribute profits and earnings as those happen. Obviously, it's a regulated entity, as I mentioned earlier. And so you do, of course, have to ask permission from the domicile. You can't just take money out as you see fit. And so there's a process that you go through from a compliance perspective. So certainly you want to consider the compliance requirements, the capitalization, You also want to consider and think about the ownership of the captive, and then if you have changes with that structure down the road. And then a big piece that we always talk about with our clients, and the team is very well familiar, is overcoming the learning curve. We spend a tremendous amount of time, not only in the beginning, but ongoing with our clients on the education and knowing and understanding how a captive operates. And that's an important process that you need to consider as you evaluate the captive.
And another key item when you're evaluating a captive from a company perspective is where it's going to be domiciled. So where are we going to establish the captive? What makes sense from a regulatory perspective, legally, and any ownership requirements associated with the captive, right? So these are just 10 of the top global domiciles, and CICA is domicile neutral, and we want you to evaluate whatever domicile makes sense to you, but it's not a requirement for this. So just keeping that in mind, a lot of the legislation is similar yet different between the various domiciles, and that's why you see a variety of numbers of active captives within the domiciles. Each have attributes that make most sense for various clients. And that's why we encourage the clients as well as our team to look all around the world on what makes sense for that individual client. Anne Marie, anything to add here?
Absolutely. There are great options, and they continue to grow over time, which is fantastic.
Great. Now I will go over 2 of the common captive program structures. So the first is going to be fronted reinsurance. This is a structure where the policy is issued to the insured or the parent company by an admitted carrier, which from the perspective of the captive is referred to as the fronting carrier. With some domiciles and some lines of coverage, this policy is required to be written by an admitted carrier. Some examples of those are workers' comp and auto liability. Another scenario where a fronting company might be utilized is if there are business contracts with other organizations, for example, leases, service contracts, and construction contracts that require evidence of coverage through an admitted insurer on commercial paper or rated paper. So once a fronting company is identified, either all or a portion of the limits are ceded to the captive insurance company, which is making the risk of the responsibility of the captive versus the fronting company. So the agreement that passes the risk from the fronting company to the captive is referred to as a fronting agreement. But then from there, a reinsurer could be utilized in order to pass on some or a portion of the risk from the captive to the reinsurer. This agreement is going to be referred to as the reinsurance policy, and the captive must pay a premium in order to utilize that reinsurance company. It is important to note that there are fees associated with utilizing a fronting company. I have seen these take the format of a flat minimum fee with a percentage of premium above a determined premium amount. The next type of captive program is going to be a direct issue policy. So this structure removes the fronting carrier from the picture. So rather than the fronting carrier issuing the policy to the insured, the captive issues the policy to the parent company. The captive, I do want to note that the captive still has the option to access the reinsurance market through this program structure in order to limit the exposure of the captive. Direct policies can be utilized to write coverage that the parent company currently does not carry for insurance for, which is what Claire was mentioning earlier. Or they can be written to reimburse the parent company for deductibles that the parent currently insures through the commercial market. That second type of policy is referred to as a deductible buyback or a deductible reimbursement policy. But those are the 2 main types of captive program structures.
Thanks, Monica. So continuing kind of the captive evaluation process, there are 3 main areas or 3 buckets that we put this full process into, right? So the feasibility analysis is the front end educational portion, really getting nitty gritty with the company and having those discussions on their risk appetite and a couple different areas that I'll get into here in a moment. Implementation is once they decide they would like to go ahead with the captive insurance company, going ahead and gathering various data points and insurance providers and service providers as well, and implementing the captive and putting it into operation. And then the last stage here is captive management and ongoing operations that we will kind of explain here in a little moment. So first, looking at the feasibility analysis, and a lot of these elements are going to be reflected in your essays. So when we think of what we want to evaluate, we want to think about some current exposures of the company, or in this case, of the various businesses that are in the essay prompts. We want to evaluate their current exposures, so things like Anne-Marie was mentioning in the beginning, assets, people, customers, and we also want to look at the future exposures. So maybe they're looking at changing up their business profile or looking towards selling off a portion of their business, and how that then flows directly into their coverage needs now and in the future, right? So when we think about their coverage needs at the beginning, that's also going to be in this data collection portion where we evaluate those exposures. So when we collect data, we want to look at things like the number of vehicles, so that's more towards the exposure. The coverage needs, maybe they need a lot more in terms of capacity, so we'll go to the reinsurance market. We'll have those discussions in the beginning of the process to make sure that the current program and the upcoming changes to the program are in alignment. So when we work with the companies, we also go through what's called an actuarial analysis, where we work with a third-party service provider, an actuary, to go through what the various scenarios of a captive program, like Monica had detailed, could look like in the first 5 years. So what we will do from there is go ahead and take a first 5-year look at the captive's operations. Those would be the 5-year financial pro formas that are put together. That is not a requirement for this project, so don't worry. But that is something that when we think about a full feasibility analysis, that's something that's very integral into the decision making of an organization. The same with domicile analysis. So the top 10 domiciles that were shown earlier, that is something that we'll have a really broad discussion with clients on, looking at the various operational, strategic, and financial requirements in terms of their program and the alignment with the domicile. And also we bring in a legal representative and possibly a tax and audit consultant to have a discussion about an ownership and structure analysis. So during this, we're going to look at how the captive would sit in an organization. And we'll also think about what structure in terms of a single parent captive or cell facility or renting a cell, whichever option would make the most sense. And then some considerations, obviously, in this process, because there always will be. We want to look at some various investment considerations. How can we make the most of this captive company? And as well as cost considerations. So we were talking earlier about some competing sources of capital or competing risks as well. So the company risk appetite will be a continuous discussion throughout this process, as well as program requirements. So maybe halfway down the feasibility analysis, we realize that there is a very small quirk to the organization that needs to be applied into a manuscripted policy. And that is a perfect time to have that discussion during this feasibility analysis portion. Team, if I miss anything on this portion, or should we talk about implementation?
We should talk about implementation and then management. Thank you, Claire. Perfect.
So when an organization has completed their full feasibility analysis, usually it will be about 90% of that analysis will feed directly into the captive application. So once we say, yes, that's step 1, decision to proceed, the company says, we would love to go ahead and create this captive. We'll continue into step 2 and really solidify the service providers. So when we think about that, there needs to be a captive manager in play. There needs to be an audit firm in play. There needs to be a legal representative or an attorney in play, as well as an actuarial resource available. And sometimes it's going to be an investment manager and a variety of other individuals that we'll detail in a moment. And then once we have those kind of put together and wrapped up, step 3 is going to make sure we have the development of the business plan aligned, as well as a meeting with the regulator to determine a board of directors. So meeting with the regulator and then the determination of board and directors can kind of go in parallel, but having those different touch points internally and externally is something that the company needs to make sure that they are staying on top of. And then also, once we get to that point, most likely we will have 100% submitted application ready for submission. And we're able to move to step 5, where we capitalize and receive the approval letter. And from there, the organization is able to go ahead and continue with their plan of implementation and hold and attend the first organizational meeting and commence underwriting. So this process can take anywhere from 8 to 12 weeks, and it will heavily depend on a variety of elements from third-party service providers as well as the company itself.
Thank you, Claire. Once the captive has been implemented and has written its first policy, that's where the captive management process begins. Here at Highland, we like to think of ourselves as the quarterback for the captive. So we are coordinating with all the service providers that you see here that are integral in making sure that this captive insurance company runs efficiently. So at Highland, what we do, we liaise with the domicile regulators. We handle all of the annual board meetings as well as any insurance policy renewals, and to just make sure overall that from a regulatory standpoint, the captive is in compliance with its state of domicile. Another area of our responsibility is to make sure that this captive is being utilized to its fullest potential. So on an annual basis, at least an annual basis, we are reevaluating to make sure that the coverages that are in place, the limits that are in place make sense. But overall, the captive manager is just going to be the quarterback to make sure that the captive is running the way it's supposed to.
And then some quick just elements and resources that are going to be available to you all throughout this portion of the essay contest. Obviously, we are all more than happy to have discussions with you, but sometimes you might just need a quick answer. And here are some fantastic places to find them. I know CICA will kind of send out all this information as well. And we're more than happy to have those continued discussions even after maybe a question is answered.
Absolutely. So now what we want to do is each of the 3 mentors here today will just present and share a couple of highlights with the different case study options. The first one here is Bain University, and I'll turn it over to Monica.
Great. Thank you, Anne-Marie. So Bain University is a large university with nearly 66,000 students. In the second paragraph, you'll notice that they are struggling with some lines of coverage and some losses that they're experiencing. So they are looking for your help in order to establish a captive insurance company that's going to work for their risks and their exposures, and to also identify some loss control procedures that they can put in place to help with some of those issues that they're having.
We look forward to those who identify this particular case study, and Monica's available for questions. The next case study option is Lovett Rentals, and Claire, if you want to share some insights here.
Absolutely. So this is one that is probably similar to an organization that many of you might used in the past, but this organization is having difficulty because they have a significant amount of coastal risks. So they're an organization that does property management. They have a considerable amount of full-time employees, but they're spread across about 100 rental properties and beyond, right? So they're complaining here in the second paragraph about the increasing frequency of catastrophic weather-related losses, higher reinsurance costs as well, rising property values, as well as increasing the building material expenses for any possible needs that they see. All of their properties have a pool, so that's an added exposure, as well as very close to the beach, like it's mentioned earlier in the prompt. I'm more than happy to have discussions about some other areas of concern on this one and really flesh out what a risk management profile could look like.
Great. Thank you, Claire, and looking forward to your insights. And please contact Claire if you have questions. And then the last case study option is Beta Airlines, and Caroline will share some insights here.
So Beta Airlines is an international airline company. They employ about 50,000 people, have a fleet of about 600 aircrafts. And they're struggling with a lot of insurance premium increases because of post-COVID catastrophic minor accidents and losses. So a lot of liability, supply chain issues. and even the increased cost of claims handling. So they're looking at starting possibly a captive to put their risk into an alternative market, as well as possibly start kind of new revenue streams such as flight cancellation insurance. So you'll kind of develop that risk management plan as well as design that captive insurance program. And I'm more than happy to answer any questions and help with anything you guys need.
Thank you, ladies, for sharing your insight. I'll turn it back over to you, Dan.
Great, thank you. Yeah, and just to highlight again, we want you to recommend the optimal captive structure to be put in place, identify lines of coverage, and then talk about some of the risk management strategies that can be used from loss control and what have you, that generally occur when companies invest in setting up a captive insurance company. Finally, I just want to say we have some resources on the website. You're certainly welcome to listen to this recording again as you work through this. Again, I want to encourage everyone that's planning to submit to again put the intent to submit form together and let us know, even if it's past the deadline. That's very helpful for us. And finally, I just want to wish everyone good luck. We hope you're excited about captive insurance and hope you're excited about participating in these 3 interesting case studies. And again, we look forward to hearing from you and more importantly, look forward to reviewing your essays. Again, best of luck, everyone. Thank you. And at this point, if there are any questions, we'd love to have them. I don't know if we have anything in the chat. Let's see. And we don't at the moment, but we'll give it just a little bit of time in case anyone has anything here. I don't see any hands raised either. So again, feel free to reach out to us in the future if anything comes up. And again, look forward to reviewing your essays and good luck, everyone. And again, thank you, Highland, for being our sponsor and for that wonderful overview. And again, hopefully the other little piece I have to say, this industry is an incredible opportunity for young professionals. And as you can tell, we have some young professionals on this call, and you get to travel, you get to see different, you noticed those leading domiciles, some places like Bermuda, Cayman Islands, Hawaii, Vermont. There's a lot of nice places that unfortunately you sometimes have to travel to. And I say that in a joking manner because it's one of the nice perks. It's also an exciting career because you're really helping large organizations come up with incredible solutions that help them save money and make money and generally make their organization a safer place. So with that, I still don't see any questions in the chat. So again, best of luck, everyone. And thank you, Highland, again, for being our sponsor. Goodbye.
Thank you.
Thank you.